Welcome to another video of Halal Pips. In this video, we will learn about the structure of the Forex market. Let's start by comparing the stock market structure to the Forex market, which most people are likely familiar with. A stock market is a monopolistic, centralized market. Only one entity, a single specialist, has control over prices. All trades must pass through this expert. As a result, prices can be easily changed in favor of specialists rather than traders. That is the primary reason why the stock market is manipulated. So, how does this happen? Consider the case where the number of sellers suddenly outnumbers the number of buyers. The specialist, which is obligated to fulfill the orders of its clients, is left with a large amount of stock that he is unable to sell to the buyer side. To avoid this, the specialist will simply widen the spread or raise the transaction cost in order to discourage sellers from entering the market. To put it another way, the experts can manipulate the quotes to meet their requirements. Let us now compare the stock market to the foreign exchange market. The Forex market is a decentralized market with little room for price manipulation. In contrast to stock or futures trading, there is no single price for a given currency in the Forex market at any given time. The price you receive will be determined by the broker you use. Consequently, you will always receive the best deal since the market is so large and dealer competition is fierce. Now, let's examine the hierarchical structure of the Forex market. Even though the FX market is decentralized, it's actually pretty simple to map out the existing hierarchy structure. The major banks are at the top of the Forex hierarchy. The players in this market, which are made up of the world's major banks, trade directly with one another or through voice or electronic brokers, such as EBS Market and Reuters Matching. In the Forex hierarchy, the EBS and Reuters dealing 3000 spot matching are in the second step. The liquidity of currency pairs varies between these two institutions. EBS and Reuters, now rebranded as Refinitiv, compete in a similar way to Coke and Pepsi. They are constantly competing for clients and trying to one-up each other for market share. The different medium and smaller size banks that trade through the interbank trading network are in the third step from the top. Hedge funds, corporations, retail market makers, and retail ECNs are the next steps in the hierarchy. Because these institutions use commercial banks for their transactions, their rates are slightly higher and more expensive than those who use the interbank market. Retail traders are at the bottom of the Forex hierarchy who trade with a small initial investment. The number of retail traders is expanding on a daily basis. A large number of retail Forex traders have emerged as a result of the recent internet revolution. That concludes today's lesson. You now have a better understanding of the Forex market structure.
Thank you for watching with halalpips.com. Share your thoughts and ideas with us in the comment section.